on and let's talk about Capri Global. Definitely strong set of numbers coming in. We can see NIM sustainable, but the gold loans yield has been slightly soft, but the total ROA remains above 3.5%. Is it even possible? Let's talk more on this. We are joined by Mr. Rajesh Sharma, MD, Capri Global Capital. Mr. Sharma, hi, welcome to the show. Let's talk about the NIMs. Very high level, 9.2%. Just want to know how sustainable is NIMs given competition and yield moderation in gold loans, and with falling cost of borrowings, how much more margin expansion is realistically possible out there?
Yeah, thank you. So if we talk about the margin expansion, looking at our gold is already about 46% of AUM. There is a margin expansion happening slightly in the MSME and construction finance side. Gold loan, we have seen that we are more focused on addition of the new branches. And initial level, when you have to really make your AUM to surpass a particular level, we have focused on the strategy of little slightly lower yield there and the higher growth. And the reason being that we do a lot of co-lending. So almost 40% of our gold AUM sits in the co-lending with a partner bank. And those banks yield, we offer some benefit to the customer, and that is why overall it is looking a lower yield. But on a margin basis, I think this co-lending piece have really done the wonders by enhancing our fee income, which is comprises of the co-lending, car loan, as well as insurance distribution, is close to about 30%, which is one of the highest. So overall, it has been a very good quarter, and we are happy that we could deliver a ROE despite the new QIP of 2,000 crore, the ROE in the range about 15% for the whole year.
Right. Mr. Sharma, also, is the higher provisioning in Q4 FY26 a one-off, or should we expect elevated credit costs going ahead also?
So we have gone very conservative, looking at the West Asia crisis. We have taken some management overlay, and that has been a prudent practice. And because of that, the credit cost is looking elevated. I think overall basis, credit cost and the portfolio quality, you see, our gross NP and net NP is all-time low. So that way, it is quite robust. But being a conservative and is guided by the board, we have taken the management overlay. Hence, there is some elevation on this.
All right. Let's talk about the recent profitability improvement. Is it structural or cyclical? Can ROA remain above 3.5% even if credit cost normalizes higher?
So I believe that our ROA and ROE, we are aiming to be kept at about 4% for the next year. So it will have a further improvement. And next 3 years, we intend to have ROA and ROE in the range of about 4% to 4.5%, and ROE in the range of 16 to 18%. And we calibrate our growth in a manner that will not compromise ROA. ROE will not chase only the growth. We'll be having a sharp focus on the profitability in our margins.
Right. Also, what is your medium-term AUM growth guidance, and what segments are likely to drive this? Gold loans have also seen a significant growth. How sustainable is this growth if the gold prices stabilize or decline?
So if the gold prices decline, it has definitely impact. But since we are only about 1,000 branches in the gold and intend to open almost another 1,200 branches in next 3 years, so that new geography addition will also drive the growth. And in case the gold loan prices remain stable, I think we should be able to deliver the growth of about 25 to 30% overall AUM basis. And our forecast is by FY28, we should be aiming to be 55,000 crore AUM. We should be about 25% growth during the next 2 years.
Right. Let's talk about gold loans now form almost 46% of your AUM. But then what is the optimal long-term mix you are targeting across gold, MSME, and even housing now?
So overall mix looks like the gold will be in the range of about 50%. And the rest of the segment of affordable housing, MSME, and construction finance will be in the range of about 15 to 18% each.
Right. All right, Mr. Sharma, on that note, we'll let you go. And thank you so much for taking the time out and joining us. Let's quickly slip into a short break.